Happy Monday, everyone. Hope you're doing well. Well, it turns out that the Bank of Mom and Dad not only is open, it's handing out more cash than ever before. What will the impacts be on those that are preparing to retire, and what should you be aware of as a reverse mortgage professional? We'll dive into all that in just a moment, but let's begin here. It says that young Americans are having problems becoming fully independent. And this failure to launch, as it's been called in the past, is not just due to irresponsibility, it's also due to larger macroeconomic factors. And millennials who've been ridiculed for the boomerang kids who ran off, left home and moved out, and then they came back again, are really finding that the security blanket of college isn't everything they thought it would be. They end up being saddled with debt. But now we have a trend, and that is continuing with Gen Z. So the latest cohort of 20-somethings is taking out more money from mom and dad, and over half of the adults in Gen Z reported that they don't even pay for their own housing. And that's according to a 2024 Bank of America study. In fact, parents of Gen Zers are expected to give their children, on average, about $1,800 a month. That is shocking. That's based on a report from savings.com. So that's the highest level we've seen in 3 years. I think it was much lower during the pandemic because these adult children were receiving stimulus checks, as many of us did, and that really helped kind of buffer some of the financial pressures that they had at the time. So this behavior is not on the account of arrested development, as I just mentioned, but we're looking at several economic factors coming into play. One is the uncertainty around AI and long-term employment prospects for entry-level jobs. We're seeing more jobs now being automated. And a lot of these Gen Zers are graduating with degrees that simply are not useful or employable. Cost of raising a child. So if you want to talk to your own grandkids, when they have your great-grandkids, it's going to be more expensive. But right now, families are spending an estimated $26,000 a year on children, which I think that's pretty high, but that would equate to a total of $468,000 over 18 years. But we're seeing that those children are needing support well beyond 18. So what is this going to do for reverse mortgage lending? Well, I think one is there's going to be a gap that you as a reverse mortgage professional can fill. There's an increasing gap between retirement reality and financial needs from the children. And so for older homeowners who maybe are being stretched thin by continuing to support their adult kids, a reverse mortgage really could be the practical means to fill that gap and be able to retire comfortably. So it allows them to really tap into that equity without having, of course, to sell, which as a reverse mortgage professional. But parents are being asked to do more for longer, and reverse mortgages can help them preserve or maybe subsidize their financial nest egg, reduce some financial stress, and to create this flexibility where they can support not only themselves, but perhaps their adult children. So we're looking at a very interesting inflection point of all these different economic forces. But again, the Bank of Mom and Dad is in fact open, and it's handing out more cash than ever before. So this Bloomberg article really underscores that. And if we see any softening in the economy, then of course that would probably even apply more pressure to the parents of adult children. So our next story is not about doom and gloom. It's actually about opportunity for you as a reverse mortgage professional. But right now we're seeing a standoff between would-be home buyers and home sellers. And so we're seeing prices that are still at record highs across most of the country, but we're also seeing a collapse in home sales. They're dropping like a rock, that according to Redfin. So let's dive into this report and learn just a little bit more about what's going on in the national housing market. It says that pending sales fell 3.5% year over year during the 4 weeks ending July 6th. That's the second biggest decline since early February. The median U.S. home sale price hit a record $399,633 despite that. So these are the pressures that we're seeing right now. Now, there are some encouraging signs that Redfin notes for sellers that have mortgage purchase applications increasing 9%. So we are seeing an uptick in purchase mortgage apps. But some homeowners are actually just deciding to stay in place. And why would they want to move? Because they're perhaps in a very low interest rate loan, maybe paying as low as 2.75% or 3% on a 30-year mortgage. That's going to help really restrict the available inventory that's needed for the housing market. But the prices, even if you increase housing inventory significantly, I believe that home prices need to come down to a level that is actually realistic. I know that's not what we want as a reverse mortgage professional, because it reduces the amount of equity or home value to work with to see if an individual would in fact qualify for a HECM or a proprietary reverse mortgage. So these are some of the data points we're looking at. The daily average 30-year fixed rate is just about a little over 6.75 as of July 9th. So here's my take on this story. So home sellers are not lining up really to sell their homes. In fact, we're seeing many home sellers delist their homes because they're not getting the price that they want. Many of them are emotionally, I would say, if not all, are emotionally attached to the sell price of their home. They're just not grasping the reality that they can't sell their home at 2022 prices at 2025 interest rates. And until they do, then that standoff will continue. But we're seeing delistings, people taking their home off the market, increasing across the nation. And then we have sticker shock, but we're still seeing some bidding wars in just a few pockets of the country. So what does this mean for you as a reverse mortgage professional? Well, there are two takeaways. One is that fewer home sales mean that fewer homeowners are really going to be looking to sell and downsize and relocate. So they're going to need the funds to help age in place. So what does this mean for you as a reverse mortgage professional? Well, there's one clear takeaway that I see, and that is that fewer home sales today means that there's going to be fewer homeowners building fresh new equity, and that is stepping up into a bigger, more expensive home, right? And so maybe 5-10 years from now, we may see that home values, the median home value of a home that's being used for a reverse mortgage may be down a little bit, but we're also going to have that need to help seniors age in place who are simply staying put because they do not want to relocate and they're not too keen on selling their home at a less than desirable price. But for those that do, there's always the HECM for purchase, which is really a force multiplier for retirees seeking to right size into a new location. The second takeaway is that this market may be encouraging more older homeowners to just stick it out and age in place. And of course, that's going to require additional funds, which may be found with a reverse mortgage. So there you have it, kind of the macro trends according to Redfin. We're seeing definitely a market shift. I think things are moving along pretty quickly when it comes to home prices. We're seeing a real market increase in price cuts on listed homes, and we're also seeing record low home sales right now, so that may continue throughout 2025. I believe that by the fall or late fall that we're going to have a little bit of a clearer picture where things may be developing in early 2026. Well, here we have it. Yes, another state-sponsored reverse mortgage bill. I know you're not shocked. We're going to look into Philadelphia's latest housing bill as it relates to reverse mortgages. That would apply to the federally insured home equity conversion mortgage and also to proprietary loans. So let's look at this press release real briefly. This came out just on July 14th. And this bill is being sponsored by State Representative Morgan Cephas, a Democrat from Philadelphia. Its intent is to protect homeowners from unknowingly losing their home and generational wealth. It's also pointing out that senior citizens and older homeowners on fixed income often refinance their home using a reverse mortgage. And they're looking at the benefit of an immediate financial gain, but some of them don't fully understand the long-term outcome of getting a reverse mortgage. So we're talking about House Bill 1466, which they say will ensure that anyone getting into a reverse mortgage first receives face-to-face financial counseling, and that would help them become more aware of the pros and cons of the loan. Then they go on to explain what a reverse mortgage is. But this is interesting. They're looking at the economic struggles across all age groups, but especially older homeowners. And here's the part where I'm going to take a little bit of exception here. It says, seniors in particular often fall prey to the promise of short-term gain without realizing what they may lose down the road. Now, any ethical and responsible reverse mortgage professional that I know is not talking about the short-term gain of a reverse mortgage. They say also, and this is interesting, that the reverse mortgage is affecting intergenerational wealth. This next statement echoes much of what we see on both the federal and state level when it comes to lawmakers that are, well, let's just say simply uninformed about the reverse mortgage. And they say this. It says they want seniors in particular to be protected from falling prey to the promise of short-term gains without realizing the long-term consequences down the road. Now, any responsible and ethical reverse mortgage professional I know is not talking about short-term gains alone. They're talking about the big picture. What would you be doing in 5 to 10 years, for example? Also, this is the statement I really take exception to. It says, this is one more plank in our effort to responsibly protect generational wealth and safeguard homeowners from unsuspectingly losing their life's investment in their property. So without any further clarification, what Representative Cephas is implying is that you can lose your home simply by getting a reverse mortgage. That may not be what she means, but just making these broad statements I really take exception to because it creates unnecessary fear in the mind of the older homeowner. But let's talk about the bill itself. It is going to be passed up to the state Senate for consideration. So here it is, House Bill 1466 with the General Assembly of Pennsylvania. But I want to dive into the second page because here's where they address face-to-face counseling. And I was relieved to see this. It says, if the individual is unable or chooses not to schedule an in-person or face-to-face visit with a housing counselor, either by traveling to the housing counseling agency office or even having a counselor come visit them in their home, conducting housing counseling over the telephone or through video teleconference is acceptable. Now that to me comes as a great relief because using HUD's counseling search tool, I only found 5 approved HUD counseling agencies for HECM counseling for face-to-face. So there's only 5 of these agencies in the state of Pennsylvania that have face-to-face counseling, at least according to HUD's counseling search tool. And 2 are located in Pittsburgh, 2 in Philadelphia, and 1 in Pottsville, Pennsylvania. So we'll watch this bill closely to see what the state Senate does. But these comments are typical, but also unfortunate. And I believe that many of these bills are really just duplicating existing federal law that requires counseling for a HECM loan. And with HECMs representing well over 90% of all reverse mortgages in the U.S., I think this bill is in fact duplicating those efforts. But to be fair-minded, we do have to point out that this bill maybe would close the gap on counseling requirements for proprietary or private reverse mortgages as well.